In the midst of a regional bank crisis, triggered by the Federal Reserve's unprecedented move to raise interest rates at an astonishing 24-fold rate within a mere 17 months, the financial landscape finds itself at a crossroads. A stark comparison is drawn to the era of Chairman Volcker, where interest rates were increased twofold, not 24-fold. This aggressive monetary policy has sent shockwaves through the regional banking sector, raising questions about the potential fallout. Remarkably, during this regional bank crisis, Bitcoin emerged as an unexpected hedge. Its performance defied conventional expectations, witnessing an upward surge. The crisis highlighted Bitcoin's flexibility, agility, and opportunistic nature, positioning it as a distinct asset class that could thrive amidst economic turbulence. While traditional financial institutions grapple with the fallout, Bitcoin demonstrates its ability to navigate uncertainties and act as a refuge for investors seeking alternatives. The Federal Reserve, sensing increased stress in the financial system, is now under scrutiny. Predictions abound that the Fed may reverse its course and cut interest rates soon. The disconnect between economic data from companies and government reports fuels speculation about the need for a swift response to avert further crisis. The speed and severity of the rate hikes, reminiscent of the regional bank crisis, have raised concerns about the Fed's ability to manage economic stability. Deflation looms on the horizon, with signs such as Walmart's plan to cut prices indicating a broad-based decline in prices. The belief is that the Fed, accustomed to combating inflation, may find itself unprepared for the challenges posed by deflation. The shockwaves of a deflationary environment could reverberate through the economy, challenging traditional economic models and policy responses. Turning to Bitcoin price predictions, analysts foresee substantial growth. A base case predicts Bitcoin reaching $640,000 by 2030, while a more bullish scenario envisions a staggering $1.5 million. These predictions underscore the growing recognition of Bitcoin as a viable long-term investment and a potential store of value. Speculation arises about the future of SEC Chairman Gensler, particularly in the context of political aspirations. Whether he remains at the SEC after the election or not becomes a matter of intrigue, with some suggesting that political appointments may influence his tenure. The ongoing saga of the SEC's stance on Ethereum ETF approval adds another layer of uncertainty, with court cases potentially swaying regulatory decisions. In the financial sector, Vanguard faces criticism for its strategic decision to ban certain ETFs. Many view this move as a mistake, and there is speculation that new leadership at Vanguard may reconsider this policy in the future. The dynamics of the ETF market are evolving, and the choices made by major players like Vanguard can shape the industry's future. Universal Basic Income, UBI, becomes a point of contention, with staunch opposition arguing that it could undermine the incentive system driving innovation in America. The fear is that a guaranteed income might stifle individual ambition and entrepreneurial spirit, leading to a decline in overall innovation and productivity. Flexibility, agility, and opportunity are emphasized as critical factors in navigating the ever-changing financial landscape. A personal story is shared, illustrating the success achieved by an individual with only a 6th-grade education in the American Air Force radar field. This narrative underscores the importance of adaptability and resilience in the face of challenges, echoing the sentiments of those who champion innovation and flexibility. Critiques are leveled at Jamie Dimon of J.P. Morgan for his perceived hostility towards Bitcoin, seen as a reaction to the potential disruption it poses to traditional financial systems. The fear of change and the unknown future of finance may drive resistance from established players in the industry. In contrast, Fidelity receives praise for its openness and support of cryptocurrencies, positioning itself as a more forward-thinking institution compared to some of its counterparts. In conclusion, the financial landscape is undergoing seismic shifts, with the regional bank crisis, Bitcoin's resilience, the Federal Reserve's interest rate policies, deflation concerns, and regulatory dynamics all playing crucial roles. As the future unfolds, adaptability and openness to innovation will be key in navigating the complexities of the evolving financial ecosystem. Please go ahead liking, subscribing, and sharing with friends to support our content. The information is for general purposes. Viewers should conduct research and consult professionals for financial decisions.